What's up, everybody? Michael and Coco here. You're watching episode 30 of the Weekly Scan.
The Weekly Scan.
The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we're going to be using technical analysis to go over 3 stocks that are on the top of my watch list going into next week. Today, we're also going to talk about the last trades that took place last week. We're going to do some follow-up there, and then we're going to talk about my portfolio for the Weekly Scan, where we just recently started trading a $3,000 account to kind of go over where we stand. And as for a quick disclaimer, these videos are for entertainment and educational purposes only. These are by no means recommendations. I am just sharing with you my trade plans and my personal opinions. With all that said, let's go ahead and hop into today's show. The first thing that I want to start off with today is where the portfolio currently stands. Now, as you know, if you've been watching this, I started with a $3,000 account just a couple of weeks ago, and I wanted to start tracking the progress and doing follow-up on my individual stock picks that I'm sharing with you. So we got as high as 31.23. That was just above 4% for the account. But this last trading week, I was hit pretty hard. I lost 4 out of the 5 trades. However, what I want to really drive home here is how important risk management actually is. So out of all of those trades, right, I won 1 trade. My account only dropped from 31.23 to, here's a screenshot, to 3,105. So let me kind of walk you through that. Overall, I'm still positive 3.51% in the last couple of weeks of trading. This last week, I dropped just less than a percentage point. So 0.57% I dropped down. So right now I'm sitting at about 3,100 capital. I'm up 3.5%. And that's during the time of all this market chop. So I'm pretty happy with that. When the market started rolling over, one thing that I did that I don't think I posted because I was too quick to do it is my long positions were starting to get hit at a pretty rapid rate. And in order to make up for those long positions getting hit, oh, you know what I did post? I posted on Twitter. There was a flush point that I saw. So in order to hedge those long positions to lessen the blow, I took a short position on the SPY and it managed to capture some gains. Now that was a very quick intraday trade, but what that did was allow me to alleviate some of the downwards pressure on the portfolio. So I did take that trade. And, you know, that was, like I said, it wasn't like some huge amount of trade. It was 1 contract. It was 1 put on a flush point, and it mitigated from losing about $50 for that day to losing about $14 for that day. So a quick little adjustment there that I did. Going into this week, we're going to go into 3 different stock picks, and I'll walk you through those trade plans here momentarily. But let's go ahead and follow up on the 3 trades that I did do and that I did discuss on the Weekly Scan. The first one here is ticker symbol JD. And ticker symbol JD, I notified right here, and we're looking to see about a breakout from this trend line, and really we had a gap down, and my entry was supposed to be at about 74.05, but because of the gap down I got filled significantly lower, and then we started to see a nice run up. I captured some profits right there. I made about $30 on this trade, and then I got out, and as you can see, we just saw chop and downwards action thereafter. So this was not a full breakout moment, unfortunately, but I was fortunate enough to make some money on this trade. This is ticker symbol STLD, and this one I was pretty excited about. We started to see a breakout here, and on nice volume. On the weekly time frame, we started seeing a breakthrough from a major trend line, and just the next day, I mean, I entered in, and then boom, I was just stopped out like almost instantaneously, resulting in, I think it was like a $20-something loss right there. Maybe a little bit less because I got out pretty quick on this big gap down. I think I got filled in a little bit lower, and then I got stopped out right below the low of this candle, and I haven't really considered entering back into this trade. However, on the weekly time frame, I don't have the chart up right now, but it is back testing that trend line, so I might revisit that here midweek. So yeah, this was a losing trade, big drawdown. This is why managing your risk is so important. If you didn't hold your stop loss here and you're like, oh no, I'll just buy in a little bit lower, you would have went from 31.50 basically all the way down to 28.76 and saw some movements right around there. So that would have been a pretty big hit per share that you own. And that is one reason why just managing your risk is so important in today's market and in every market. Ticker symbol BVN. Man, you know, BVN I was pretty excited about, but I could not get anywhere on this trade. I thought we might break above this trend line and see a little, you know, move to the upside. And this one lasted for quite some time. I didn't get stopped out. 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 And then all of a sudden, this big drawdown candle stopped me out right here at the low of this one. And then it bounced right back. So BVN might still potentially move to the upside. But what I probably should have done here is wait for a confirmation above the 50-period moving average. I saw that the price did get above this hammer candle, which I was pretty excited about, but it didn't get nearly above the 50. So a lot of downwards pressure here. I like this volume, but ultimately I lost some money on this one as well. Not that much because I was mitigating some of my position, but overall a losing trade. So those were the 3 trades that I took. Let's go ahead and hop into the 3 trades that I'm looking at next week. The first one is ticker symbol VIAC. Now, I don't have my trade plan up here, but I'm just walk you through it. First off, let's talk about the context of the chart. The context of the chart is this. We have the 50 period sloping up. We have the 20 EMA sloping up. The price action did pull back into it and bounced. And then 200 is sloping down. However, the price action is above it, so that is nice. We recently crossed above it, and that's good. And we have this golden cross here where the 50 crossed back above the 200. This could mean that a potential trend reversal is taking place. However, we do have some overhead resistance. I'm thinking about doing a couple of things here, and I haven't fully decided because I want to see what Monday brings. But first off, this level right here, 30, could very well be a nice point of entry if we start getting to move right above it, especially if we start seeing it on high volume. It seems to me like it struggled. Once it got above it, there was a lot of support right there, but then it cracked back below. So if we do get a close and a hold above there and see some signs of strength with volume, we could see another leg higher. You're probably wondering what this pink line is. This right here is the chandelier exit, and that's an indicator. I'm not going to really go into what that is, but in short, you can use that as an identifier for a specific stop loss. And that's kind of what I'm thinking here. We recaptured the 20 EMA right here, so that's a good sign. It held as support. So I might just enter in somewhere below this 30 or potentially wait for a crack above it. It just depends. And I'll just have a stop loss below the chandelier exit, which is at 28.26 right now. So I'll just have just a tad bit below, and I'll trail my stop loss as every day continues until we potentially see a breakout moment. Now, when the price action is above this chandelier exit, that means the trend is bullish. And sometimes when you get crosses below, it holds below for quite some time. So I like seeing that the price action is above it and then it retested it right here. That's a good sign to me. I'm pretty excited about this trade. But, we still have a lot of overhead resistance and a lot of market uncertainty. So I'm going to be keeping an eye on it. But my plan is stated. I want a stop loss below the chandelier exit. I would like to get in a little bit lower. But I'm thinking that we might see a breakout here. So I'm either going to enter in and speculate that we will break out, or I'll buy in on the breakout itself. Just depends on how Monday looks. Ticker symbol NIO. This one is also just looking pretty good. It's a descending triangle, mind you, right? However, we do got some nice support here on this horizontal line. You can look back here. The price action came up, got rejected. We broke above, and then it's held as support multiple times. But the bears are getting some traction to the downside. They're building in lower highs, and the bulls aren't making too much progress. But, they kind of are in a way. You can see a low high here. You can see a higher low here, and then you can see a higher low right here. So maybe this horizontal line will, hold as support. We have the 50 period sloping up. That's good for context of the chart. Well above the 200 period. That's good for the bullish kind of river that's flowing up for this chart. We're kind of consolidating sideways. The price action right now on this specific candle, it's an inverted hammer, which scares me a little bit, but also, doesn't scare me all too much. But if you look back here, when you had an inverted hammer, we saw a little bit of a drop. And then when you saw here, we had a little bit of a drop. So these sometimes could play out to a little bit more of the downside. So I want to see what Monday brings us. But I'm thinking also I might speculate that we might eventually see a breakout here too. I'd like to get a little bit lower, but my stop loss would be just below the chandelier exit again. And then also this level of support. So a nice confluence right there. The chandelier exit is at 1694, so I'd probably be just below that. And if we do crash below that, I'd be actually considering potentially re-entering around the 50 period, but I'll talk about that more midweek if that actually takes place. Let's go ahead and move to the last chart of the weekly scan video. Here we go. Here is ticker symbol IAG. This is a gold mining company. what do we got going on? Overall context of the chart, it's kind of iffy, right? Where our price action is below the 50 is sloping down. The green line is the 20 EMA, we're sloping down. The 200 is kind of flat to relatively sloping up, so that's a good sign. You might be thinking, well, the context isn't great. Why are you considering this? A couple of reasons. First off, falling wedge pattern, this I kind of like. All right, so I like the falling wedge consolidation, and it's towards the lower portion of this channel. The current price action that I see, look at these candles. What does that represent on this pullback? This is a bullish engulfing. That is a strong sign that this could be a potential bottom right here to potentially see a move higher. We just crossed above the chandelier exit. So what I'm considering here and is basically getting into a position right around where the current price action is and just temporarily holding a stop loss below the 200 period moving average. And then if the price action continues to move up, I'll be mitigating shares up to this green line here, which is right around $4. I'll be taking some profits off the table, but I'd be ultimately speculating that we might see another leg higher here in the near future. As I see it right here, I can probably capture some profits within this channel. But if we do start moving to the downside, I mean, a stop loss right here, we have confluence of the lower trend line. We have the 200 period. We have a couple candles as data points. And then we could also look back in the history of the chart to see some levels of support there too. So a lot of confluence for support. The price action is buy it. That makes up for a good risk versus reward trade in my personal opinion. One last indicator that I brought in is the stochastics. Stochastics is oversold right here. So this might represent a potential point where we do start seeing a move higher, and you can see it kind of curling back over the signal line cross. We're getting back into, this realm. This could be a bullish sign for this stock. So we will see, right? We will see. That is all I have for you on this week's weekly scan. If you don't follow me on Twitter or Instagram, follow me there. If I see charts pop up through the week, I plan on posting them on those social media platforms, and I might very well also be considering just getting one of those like email server things where you can just type in your email address and your name, and I could send you just like a daily update instead of, just waiting till the end of the week. Maybe I can send it end of day with a couple of charts on there, and you could just see the chart book and just quick notes on it versus an entire video. I feel like that'd save me just a lot of time, and I wouldn't need to hit every single social platform with posting it. But let me know if you think that that's actually a good idea or not. I'm considering it. I don't know, I don't know how to do any of that, to be quite honest, but I'll try to figure it out here. That's all I have for you on today's video. Coco, do you want to say bye? Bye, everybody. Have a good weekend.